U.S. Market Summary, October 24th, Friday. Major stock indices rally after softer CPI. The S&P 500 jumped 0.84%, Nasdaq 100 rose 1.08%, and Dow gained as the September CPI showed 3% year-over-year inflation, less than expected. This spurred hopes for further Fed rate cuts, fueling optimism and price gains across the board. Semiconductor sector leads, Intel surges. Intel shares soared over 7% after exceeding earnings forecasts, inspiring sector-wide strength. AI momentum and anticipation of more mega-cap tech earnings also supported the broader market rally. Volatility sinks as risk appetite improves. The CBOE Volatility Index, VIX, plunged 6%, its lowest in weeks, as investors shrugged off inflation concerns and rotated back into equities amid bullish rate cut expectations. Crypto markets rise on inflation surprise. Bitcoin advanced to $110,850, plus 0.66%, buoyed by CPI figures below consensus and stabilizing U.S. rates. Ether, XRP, and Solana also saw post-data increases. Volatility remains elevated as traders await Fed policy clarity. Oil prices hold gains driven by Russia sanctions. Crude at $61.88, up slightly, consolidates its sharp weekly rise after U.S. sanctions against Russian oil giants stoked supply fears. New sanctions and global trade shifts are raising the prospect of continued price volatility. Gold corrects on profit-taking and rate cut speculation. Gold retreated nearly 2% to $4,075 an ounce, reversing some recent highs. Investors booked profits as risk appetite improved and the prospect of lower rates supports further corrections. Copper stays elevated amid supply shocks. Copper prices hold above $5 a pound, up over 16% annually on ongoing global supply disruptions. Market attention remains on mine issues and U.S.-China trade progress, with tightness expected if recovery continues. Consumer sentiment stagnates despite rate cut hopes. U.S. consumer sentiment remains muted as inflation fears persist, per latest Michigan survey. Purchasing intentions and expectations show little change, signaling caution despite bullish markets. Eurozone and UK outperform on data surprises. Euro-USD ticked up to 1.16 as flash German and Eurozone PMIs beat forecasts, signaling accelerating services growth. UK retail sales and PMI also surprised positively, lifting GBP and supporting European equity.